today I'm gonna let this toilet paper tell us the truth about what's going on in this crazy market. I'm gonna start with the toilet paper itself because what I had to do to get this toilet paper is very similar to what's going on with mortgage rates in this market. I had to do 3 things that I typically would not to procure this toilet paper just yesterday. I had to go farther than I wanted to a store I typically wouldn't go to, and I had to spend more money than I typically would. That's because the store right around the corner from me that I always shop at that did not raise the prices on their toilet paper, those shelves are just flat out empty. I know you've seen it. The mortgage side has gone just about as crazy because with rates dropping down, everybody is trying to refinance, and I mean everybody. Now, unlike toilet paper that is an actual commodity, the shelves can't physically run dry of mortgages, but the same net effect is happening. These investors are being pushed to capacity, so therefore they're having to raise their price up in order to slow the incoming mortgages. There's an extra layer though in mortgages because a lot of these investors also own these giant servicing portfolios, so as they're refinancing a loan, they know they're actually devaluing their own servicing portfolio by taking a loan that used to pay at a higher interest rate, refinancing it into a new lower interest rate. They still want to do the deal, but they know they're robbing from themselves every time they do it. So that is definitely encouraging them to keep the pricing up a little bit higher to slow that massive stem of refinancing that's happening right now. So the 2 things I would like for you to take away from this. First, if you've got as much toilet paper as I do right now, you feel free to not go out there and shop for more toilet paper because the toilet paper companies, they're gonna catch up to this. Everybody in the world is gonna have their extra 2 or 3 or 4 or 5 cases of toilet paper, and they're not gonna need some for a while. So pretty soon you're gonna see the shelves completely stocked again. The prices right back down to where they need to be. Same thing's gonna happen in mortgages. If you're not in dire need of a mortgage, i.e., about to purchase a home or have some other really good reason to be refinancing, like having to pull cash out to do something, or because you're going through a divorce or anything crazy like that, probably stay away from it. Let the dust settle just a little bit. Let us stock the shelves a little bit more with mortgages. Let us make it more easily available and at the correct price. Part number 2 is more of an observation. We've had low rates for years now, so we understand what it does to our consumers. Gets them all hyped. They want to do things now. They're stoked to save the money, all those things. Those other lenders, this is the first time in who knows how long that they've actually had low rates. So consumers calling them and asking them for refinances and to help them save money and to get mortgages now, that's completely foreign to them. They don't understand how to work with it quite like we do because we're used to you guys being excited to call us. Just keep that in mind for the clients that do need a mortgage right now, the folks that are in desperate need of closing their home in the next 30 or 45 days because we have processes in place to make sure that that still happens and to make sure that they still get it at a reasonable price. So give me a call and we'll talk to you soon. Oh, and definitely not to poke fun at all these things, but in the office we're kind of wondering, why toilet paper? Why not canned food? I feel like last time the world ended, people were stocking up on canned food and not toilet paper. I might be missing something though.